I'm Russell Clark, and this is VixShield's Morning Outlook, where it isn't news till we talk about it. Good morning, traders. Today I want to zoom in on something specific, something that separates those who last in this game from those who don't. Because yesterday the market gave us another reminder, the kind of reminder that doesn't scream, it whispers. And if you know how to listen, it tells you everything you need to know about staying disciplined when the headlines are screaming louder than ever. Let's start with what happened overnight. While most of you were sleeping, the big money was busy repositioning around a world that suddenly feels a lot more fragile again. Fresh reports out of the Middle East painted a picture of escalation that crossed a critical red line. Iranian drone strikes hitting facilities in the UAE. A British cargo ship left ablaze off the coast. The Strait of Hormuz, that vital artery for global energy, seeing renewed disruptions, even as American naval escorts tried to keep commerce flowing under what they're calling Project Freedom. You could almost feel the tension in the futures, oil spiking on supply fears, safe haven flows, quietly moving into gold, even as Bitcoin held its own above 80,000. Meanwhile, in Asia and Europe, the tape was mixed but watchful. Manufacturing numbers continue to show cracks. That PPI reversal we talked about yesterday isn't fading. It's reminding everyone that inflation isn't some ghost from the past. It's reappearing faster than many expected. And yet, the S&P futures ground higher in a narrow range. Not a rip higher, not a collapse. Just this careful, almost deliberate dance. The kind that makes you wonder if the institutions were front-running the news flow while retail stayed glued to headlines that were already 12 hours old. Which brings me to the big media versus reality segment we do every morning. You turn on the financial channels right now, and what are they telling you? They're painting this defiant stock market against a collapsing macro backdrop. One headline after another about banks scrapping rate cut forecasts. Supermicro facing what some call a potentially fatal probe. Warnings that the macro situation is falling apart while equities refuse to listen. But here's what's really happening, folks. The media loves a crisis narrative because fear keeps eyeballs on screens. It sells. It creates clicks. It makes you feel like you need them to interpret the chaos. The truth is more nuanced, and that's exactly why we exist. While the talking heads chase the latest oil shock or the latest Fed speech preview, they're missing the quiet mechanics underneath. The equal weighted index has been flashing weakness beneath those headline highs for days now. Breadth isn't confirming the rally. Yet the cap weighted names, powered by a handful of AI giants, keep the averages looking bulletproof. That's not defiance. That's concentration risk, dressed up as strength. And our community sees through it. We don't chase the narrative. We read the structure. We respect the fragility curve, that point where bigger systems don't get stronger. They just get more vulnerable to the next shock. Let's go deeper on the geopolitical landscape, because Tuesday is when we earn our keep by going beneath the surface. The Iran situation isn't some isolated flare. It's a live tail risk, sitting right on top of energy choke points that the entire global economy depends on. When you see U.S. naval vessels escorting merchant ships through the Strait of Hormuz, that's not routine. That's a strategic commitment with real costs. It raises the odds of prolonged disruption. It puts upward pressure on oil that could feed back into sticky inflation. Turkish officials are already warning of an extended global energy supply crisis if this widens. At the same time, we've got Fed speakers on deck today, Bowman, Barr. Comments from Williams yesterday acknowledged that risks have risen on both sides of the mandate, yet policy remains positioned. The market is trying to square that circle. Higher oil volatility on one side, potential tariff-driven inflation pressures that may fade but could be replaced by new ones. And underneath it all, this accelerating institutional push into AI infrastructure. Blackstone dropping $1.5 billion into Anthropic isn't noise. It's structural capital deployment that could offset some of the demand destruction fears if geopolitics heats up. Now here's where it gets interesting for our methodology. Remember what we discussed in yesterday's closing analysis? The tape had turned quiet. VIX was compressed. Participants were waiting on data. Well, that quiet period met fresh geopolitical reality overnight. And our RSAI engine has spoken clearly. The signal today is hold. VIX at 17.34. Full hold. I know it is tempting when you see the credits these strikes would pay, but discipline is what separates consistent traders from gamblers. We wait. This is the perfect moment for that educational micro lesson I promised you at the top of the show. Let's talk about contango and why it matters so much on days exactly like this. Our VIX term structure is in strong contango right now. That means the 3-month expectation, what we call the VXV, is sitting meaningfully above the spot VIX. In plain terms, the market is pricing in that volatility should stay relatively contained in the near term, even as it expects higher volatility further out. For iron Condor traders, this is favorable. It tells us premium selling has the wind at its back, because volatility tends to mean revert lower in contango environments. But here's the deeper part most people miss. Contango doesn't remove risk. It simply defines the character of that risk. It gives us permission to be patient rather than impulsive. On a whole day like today, that contango is actually protecting us by reminding us that the setup isn't quite right yet. The EDR gate and the VIX threshold both need to align. When they don't, we sit on our hands. That's not inaction. That's the entire methodology working as designed. This is how we avoid becoming one of those tragic stories you hear about. The trader who couldn't resist collecting premium on a day when the geopolitical risk premium was mispriced. Think about the trap being set right now. The big money knows retail traders hate sitting out. They hate missing out on what looks like easy credits. So the headlines keep the fear and greed cycle spinning. Oil shocks 1 hour. AI deal flow the next. Fed speakers sprinkled throughout. All of it designed to create urgency. But we don't trade urgency. We trade structure. Our iron condors are built for days when all the signals line up, not when the headlines are loudest. That's the difference between us and everyone else guessing on television. And that's exactly why this community matters so much. You can't talk about this stuff at the dinner table. Your family doesn't understand why we're excited about a hold day. They don't get that every time we successfully avoid a bad setup, we're protecting capital that gets to compound tomorrow. But we get it. We're the insiders. While the rest of the world is reacting to yesterday's news, we're already positioned with the right mindset for what's coming next. This is our methodology. 20 years of hard-won lessons distilled into a process that removes emotion. That's powerful. That's freeing. We've built something special here, a group of traders who understand that patience isn't weakness. It's the ultimate edge. When VIX is declining like it is this morning, down sharply from yesterday, that creates an ideal environment for premium selling, but only when the full gate is met. Today the gate said, wait. So we wait. Proudly, confidently, together. Here's what we're watching as the day unfolds. We're keeping a close eye on those Fed speeches. Any shift in tone around tariff impacts or policy independence could move volatility expectations quickly. We'll be monitoring the oil complex for signs that the Hormuz situation is stabilizing under those American escorts, or if it risks widening. Bitcoin's continued strength alongside traditional assets is worth noting too. It tells us capital isn't running for the hills just yet. And of course, we'll be glued to any updates coming out of the Middle East, because those energy choke points can flip the script in minutes. As we move toward the close, our RSAI verified signals will be ready if conditions shift in our favor. But right now, the discipline meter is clear. Protect capital first. Everything else follows. And be sure to listen for any breaking news from Miss Vicky. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.